Alright, so you're an online retailer and you're selling things on eBay, TikTok, Amazon, and you kind of want to understand what's going on with sales tax. When do you have to pay it? What if you're just selling through your own website? We're going to go into this right now. So you have an online shop and you're dealing with marketplace facilitators like TikTok and eBay and Amazon, but you also sell directly to consumers. As I'm sure you know, Amazon and eBay and other marketplace facilitators will automatically charge sales tax on items that you sell. However, what happens when you're selling personally on your own website to customers outside of your state? Do you know the sales tax laws and sales tax nexus relating to out-of-state sales? Let's get into that right now. With marketplace facilitators, it's pretty straightforward. They're mandated essentially to collect sales tax for pretty much all transactions on their platform, and they're going to take care of remitting the sales tax on all the sales that you have made through their platform. They're going to do it on your behalf. It's just mandated because it became a burden for all the individual states to go in and kind of audit the individual guys saying, listen, we noticed that you're selling on, let's say, Amazon or eBay, but you're not collecting and you're not remitting to the state. The states want a piece of that action, and rightfully so. They put their foot down and said, all right, if you're a marketplace facilitator like an eBay or an Amazon, the onus is on you guys to make sure that you collect the sales tax for all the sales that are done on your platform and remit it to us, the states. That's pretty straightforward. What happens if you're a retailer and you have your own website and you're selling goods on that website? This is where understanding sales tax nexus comes into play. It's very tricky. So let's use New York, for example, and let's paint this picture. You have a New York seller, you're located in New York, your officers are located in New York, your office is in New York. You do all of your work out of New York, and naturally, in order to be able to sell anything, you have to apply for what's called a certificate of authority. It's basically a sales tax permit to be able to sell goods to people, to consumers, and that will create a sales tax account with the state. When you make a sale to a New York resident, let's say you have a physical store as well as an online store, even if you don't have an online store and just a physical store, if you're selling a good from within New York State to another recipient that's located in New York State, so he comes into the store and you sell it to them, or you ship it to a New York State location, you're obligated to collect sales tax from that transaction and then remit it to New York State at the end of the quarter. And if you're New York City specifically, that sales tax rate is 8.875%. Let's use 9% to keep math simple. So you sold something for $100, you have to collect $9 from them, which is 9%, and you're going to remit $9 to the state at the end of the quarter. Now, what happens when you sell outside of New York State? In other states, you have to meet certain criteria that will establish sales tax nexus for you. So one of the common criteria is an office. So if you have an office located in another state, then you've automatically created a nexus for yourself. Another example is a warehouse. So if you're using a third-party logistics, a TPL, if you're using a third-party logistics company that's warehousing and shipping your goods, and it's located in a state outside of where you primarily conduct business, you just established nexus for yourself in that state. So it may be wise to actually choose a third-party logistics company that's located in a state without sales tax or very low sales tax, which may make more sense for you. Also, keep in mind, sales tax is an administrative burden. Yes, it's the cost of doing business, but depending on the size of your company, it may be a huge administrative burden, especially when it comes to late penalties and underpayments, etc., that you may just want to avoid at all costs. So keep that in mind when you're establishing the foundation for your business and interviewing various vendors. So let's say you've overcome those two hurdles. Physical presence, that's done. You understand that hurdle, so either an office or a warehouse, and that doesn't apply to you. You're doing everything from your New York office, and you're actually warehousing everything in New York. Now we're looking outside of New York and saying, well, what will qualify and mandate us to actually collect and remit sales tax in those states? And this is where the certain threshold markers come in. So many states have established a dollar amount and a transaction amount per state before you even are considered subject to nexus in that state. Let's go back to New York, for example. New York has a $500,000 limitation or 100 transaction limit, meaning if you're an outside vendor not located in New York and you're selling to customers that are located in New York, once you exceed one of those two thresholds, you automatically have to start collecting and remitting sales tax. So once you sell more than $500,000 worth of goods, or you have 100 or more transactions into New York State, you just created a nexus for yourself, and now you have to collect and remit sales tax But when does this happen? This happens in the quarter that you've met that threshold. So you don't have to worry about any of the sales that you've done previously, just going forward. And again, this can be reevaluated year over year. Just because you had one phenomenal year doesn't mean that you're forever subject to the sales tax regime going forward. There are other ways to evaluate it and get out of it. This you have to keep in mind when you're dealing with other states as well. That's why it's important for whatever software you're using to track sales, you have to monitor the dollar amount as well as the volume that you're dealing with in every single state. And make sure that once you hit those parameters and exceed those thresholds, you register with those specific states and you start collecting and remitting sales tax as well. Hope that clarifies things for you. Like, follow, and share for additional tax tips. And if there's anything that's on your mind and you want to know about, comment below. Be happy to answer that question on the next video.